Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with the founders of GATA, the Gold Antitrust Action Committee. It's a non-profit organization that is, its objective is to expose gold manipulation, something that a lot of people doubt, and that's what we're here to talk about today at the Cambridge Silver Summit. I'm here with Chris Powell and Bill Murphy. Thank you for joining me.
Great to be here, Dan. Thank you.
Guys, I just want to start off with a few questions about that the doubters have. So let's just kick off with the first one. If there's gold manipulation, then why has gold been in a very consistent bull market for the last 10 years? It's been a great bull market for anybody who got gold at 300, 500, 700. It's been better than if you bought it around Lehman Brothers. The Dow may be at a 5-year high, but gold is near an all-time high. How is gold being manipulated down if gold is in such a great bull market?
Well, I'll defer to the smart one of the two of us here first.
Well, it would be going up far faster without the manipulation. If there's maybe as much as 100 times more paper gold in the world than there is real gold to back it. What the central banks are doing with gold is a controlled retreat. They are losing their gold reserves through outright sales, swaps, and leases, and when they run out of metal, they run out of their ability to control the currency markets. So I think they're trying to bleed their reserves out as economically as they can, Dan, but that they are in the gold market every day through metal sales, swaps, leases, futures, options. That's simply a matter of public record. You can see it in the annual report of the Bank for International Settlements. You can put the questions to particular central banks and ask them to disclose their swaps and leases and trading position in the gold market. Some central banks will acknowledge they are trading gold. No central bank will disclose its trading positions, and that's the proof that they're in the market and they're losing. They would be losing a lot faster if we had our way.
Have the central banks, Chris, ever openly come out and said that they're concerned about the gold price?
Oh, in the past, there's many historical documents that we've collected which show an enormous concern about the possibility that the gold price could get away from them. All these things are in the documentation section of GATA's internet site.
Bill, you have an investment background. Why haven't any of the mining stocks come out on this? Why aren't any of the mining stocks upset or venting or talking about this or pushing this forward? I mean, some of these companies have billion-dollar market caps. Certainly they could do something if the gold price was being manipulated.
It's mind-boggling that they don't support GATA. We're talking earlier about the price. If gold had kept up with inflation, it would be $2,500 an ounce. I mean, heck, now it's below $1,600 an ounce. That is a huge difference. And the mining companies, we've had some support with some great smaller companies. We even had support from some bigger ones way back when, Gold Fields and Anglo Gold. Anglo Gold was just trying to shut us up because we were attacking the big hedgers back then, and they were one of them. But a lot of these companies, it's ludicrous. But as Chris talks about, they have mining permit issues. Who's the one who funds them? The bullion banks. They're the ones, in many cases, manipulating the market. And it's complicated, but it is pathetic that they don't support us more.
You have to understand, Dan, that mining is probably the most capital-intensive business in the world. To get into the mining business, you need hundreds of millions, if not billions, of dollars. Mining companies are also probably the most vulnerable industry in the world. They're dependent on governments for, as Bill said, not only their mining permits, but environmental regulation compliance, for royalty requirements. Any mining company that makes too much political trouble for a government can be put out of business like that. Just you pull a permit, you get into some environmental enforcement the company didn't know about. Secondly, being so capital intensive, mining companies are dependent on the biggest investment banks in the world for financing. The biggest investment banks in the world are also the agents of the central banks in the gold market. Any mining company, any big operating mining company that wanted to support GATA would probably very quickly get a phone call from its government regulators and from its bankers.
What I'd like to add to this is that what is really sad, and it's a farce, is that assuming you believe what Chris is saying, which I do, is that this is what an organization like the World Gold Council is all about. For these people to fund that organization. They've got like a budget of $60 million a year for them to be the active participant, so that nobody can go back and say it's this company or that company supporting Gutta. It should all be done from the major gold and silver companies, gold companies, through this organization. That's what they should be there for. Their raison d'etre. The fact that they're silent is it's just beyond comprehension.
But
how bad it is.
they're worse than silent, Dan. The World Gold Council, I believe next month, is holding a seminar for central bankers and their staffs at the University of California at Berkeley to teach them how to trade gold.
Wow.
Now, that has been publicized. It's the invitation. The prospectus is on the internet site of the University of California at Berkeley and the World Gold Council's own internet site. Now, central banks trade gold for a reason. They trade gold for currency market regulation or manipulation, whatever you want to call it. Why is the trade organization for the gold mining industry and gold investors proposing to teach central bankers how to trade gold? Are they going to teach them how to trade gold to drive the price up? Or are they going to teach them how to trade gold to control the price in the interest of central banks? I would kind of like to attend that seminar, but I don't think they'd let me in. The invitation is gone only to central bankers and their staffs.
I would love for you guys to be able to attend that conference. Let's talk about getting back to the skeptics when they look at like a chart of copper and you look at a chart of silver. They look the same. I mean, I guess you could have an observation that silver is leading copper, or copper is also manipulated, or what the skeptics would say is, isn't the fact that the copper chart and the silver chart look the same proof that there is no silver manipulation?
Oh, I think there's a manipulation of all commodities, Dan. The British economist Peter Warburton wrote what I think is a crucial essay back in 2001. I believe it was titled The Debasement of World Currencies. It's inflation, but not as we know it. He argued that derivatives, if they weren't invented for this purpose, they were being used by investment banks and the central banks behind them to control all the major commodity markets. I think he speculated that it would take only a few $100 million back in 2001 to control all the commodity markets through derivatives. He argued that the purpose of these derivatives in the commodity markets was to divert investment funds out of claiming real goods as a hedge against inflation and putting this inflation hedge money into paper, so that the removal of real goods from the commodity markets would not drive prices up and turn up in a consumer price index measure. Warburton ended his essay by speculating on what a good, reliable inflation hedge would be. And he came up with things like good farmland and clean water supplies. But the prerequisite of a good, reliable inflation hedge in the modern world, he said, was that it could not be attached to a futures market because, as one wag said a few years ago, the futures markets are not manipulated. The futures markets are the manipulation.
With the manipulation being so evident, if somebody looks at this 8:20 a.m. thing we've talked about, you've talked about it forever, and now it's hitting mainstream where people see that it's obvious. Like gold gets taken down at 8:20 a.m. in the morning at Eastern Standard Time. With it so obvious, at least especially to you guys, and personally I see it more and more as I learn from you guys, with big, credible resource investors. There are a few big names, we're not going to mention them, but there are a few big names that absolutely say, no, there is no manipulation. It's just the markets. Why is that? How come there can be these such credible people doubting it and saying that it's not happening if it really is happening? What are your thoughts on that?
Well, we can go to the other side of the trade and say the credible people that are very much behind what we have to say, like Eric Sprott of Sprott Asset Management, John Emery, and so on. And it's becoming more and more obvious what's going on here. I mean, I write about it every day. I mean, they do the same things over and over again. They have been on steroids manipulating the price since early October, with gold at $17.93, silver above 35. I've never seen anything like it in 12, 14 years. Every day we can spot them. Plan A when they go to work in the morning, Plan B after the PM exit, when the COMEX opens, Plan C in the access market. They lower their COMEX margins. 4 times in a row,
Yeah.
it's collapsed. They never, the market is totally counterintuitive. We've had all this quantitative easing, QE3, QE4, Japan quantitative easing, and the price of gold has collapsed when every other market until recently has gone up, with the Dow doing exactly what they say it should do. Don't fight the Fed. It's dribbled up higher and higher and higher and higher. Even the Dallas Fed president said it's because of this money printing, this quantitative easing. Well, why should gold go exactly the other way? It's counterintuitive. It makes no sense unless you know what Gada knows.
Now we have Andrew Maguire. Are there any other whistleblowers one would expect in something of this size?
Oh yeah, there's whistleblowers who've been central bankers themselves. The Dutch central banker Jelle Zylstra, who was not only the president of the Central Bank of the Netherlands, he was also simultaneously president of the Bank for International Settlements. He wrote in his memoirs, I guess about 40 years ago, this is posted on our internet site, that the gold price is suppressed at the behest of the United States government. Now there is an international central banker who was at the top of the system who wrote in his memoirs that central banks, at the behest of the United States, are suppressing the gold price. We have admissions from former chairman of the Federal Reserve in the United States. Let's see, Greenspan, William McChesney Martin, Volcker, Arthur Burns, all have made public statements and documents that are posted on our internet site that the U.S. government is very interested in suppressing the price of gold. There's admissions all over the place, but can they be reported, or is it just too impolite a subject?
The CFTC received information months ago from other whistleblowers. They refuse to do anything about it. There's no rule of law anymore.
That leads me to my next question. Where are the big investigations? Where are the conclusive investigations where something's happened about this?
The CFTC has been investigating this for 4.5 years. There's 2 things here. One, they probably can't do anything about it because they looked into it and they realized that JP Morgan's manipulating the silver market, but one of their major clients is the U.S. government. So what are you going to do when it's your boss doing the bank robbing?
Yeah.
But the other thing is, if we're right, I can't get into any details, this will surface, this whistleblowing stuff, in some manner in the months ahead, and it's going to be quite dramatic, and it's going to get a lot of attention from people that see what's been going on.
Yeah, and this manipulation is public policy and is a matter of law. In 1934, the United States enacted the Gold Reserve Act, which created the Exchange Stabilization Fund, authorized the fund to trade in gold and hypothecations in gold without any accountability to the public or Congress. It was solely at the discretion of the President and the Secretary of the Treasury. The act was amended, I believe, in the 1970s to allow the ESF to trade secretly, not just in gold, but in any financial instrument whatsoever, and to do so secretly without having to report to the President of the Congress or the public. This is in statute. The Gold Reserve Act is law. The Exchange Stabilization Fund, established by the Gold Reserve Act, exists, and it has been authorized to trade secretly in any market. Why is anybody asking me or Bill? Ask the government what it's doing, get the door slammed in your face, and draw your own conclusions.
Let's talk about activism. You can obviously visit GATA. You can share the information you guys have put out there. You can donate to GATA. There was a guy a few years ago who had a campaign, Buy Silver, Crash JP Morgan.
Max Kaiser.
Max Kaiser. Is there anything you can do as an activist? I mean, what if we buy GLD and SLV? Are we hurting ourselves by buying those ETFs? I mean, is there anything else we can do to be an activist?
The Associated Press last week had a story from Mumbai about gold demand in India, and you got down to the 12th paragraph or so, and you found that the Indian government has authorized gold exchange traded funds in India not to hold gold, but rather to lend out their gold to jewelers to make sure it stays out in the market. Well, the Indian government at least is candid about this in acknowledging that ETFs exist to prevent the gold price, the silver price, from going up. When the biggest silver short in the world is, JP Morgan, and they are the custodian for the silver ETF, and when the biggest gold short in the world is HSBC, Hong Kong Shanghai Banking Company, and they're the custodian for the gold ETF, don't you get the idea that maybe there's a conflict of interest here? exchange-traded funds in the metals were invented to suppress the price.
Well, I say there's exceptions to that, of course, and of course I'm prejudiced, but Sprott Asset Management, for example, all the silver and gold that they say is there, it's in their funds, and there's some other good ones. So
and it's stored at the Canadian Mint. I
Yeah,
mean,
so there are
you have
exceptions.
some confidence that there's some metal there, but there are these huge transactions that happen overnight in GLD and SLV. The gold there and the silver, it's a bookkeeping maneuver that's being moved in and out of the markets as necessary to control the markets at strategic moments.
there is nothing in their prospectuses that prohibits them from taking the gold and silver that they have and mobilizing it and doing something with it in the marketplace. Yeah, I think that's very peculiar and certainly is a conflict of interest. If people that invested in them knew that they were taking gold and silver and at strategic times putting it in the marketplace to suppress the price, I just hope that comes out someday and they're just sued like crazy.
In closing, how does this end? Does this end with a good guy coming out and demanding delivery, or is it going to be a sovereign country? Is it going to be tied to the economy? How does this
I
all
like to
end?
run with that one because, again, I'm going back to Eric Sprott, is one of the smartest guys I know, and he's calling for $100 silver and then $200 silver. And what's going to happen is, because of what J.P. Morgan have done, and with their derivative playing and this other games that they've done, you're getting into an incredible shorted situation where the price of silver is going to go bonkers. I don't know whether it's going to start next week or 4 or 5 months from now, but it is going to just take off because the silver is not there. I know this from every good source I have. I think what we're seeing of late is a killer move on the downside, and it's going to be explosive. That's how I think it's going to end.
Now, how come if you call APMEX or one of these guys up, they'll tell you we've got plenty of silver, just order it?
That's not
Why
what I
is it-
hear. I don't hear
Okay.
that at all. I don't hear that at all if anyone's trying to buy it in size.
Well,
But just lately-
some metal is available, and at a certain price, a lot more metal is going to be available. The real issue here, Dan, is that there is so much paper out there, so much more paper out there than there is real metal. This ends, I think, when people who are holding paper try to exchange it for real metal, and the metal runs out. That's how the London Gold Pool ended in March 1968, when the central banks of the West were dishoarding gold to hold the gold dollar price of $35 an ounce. The U.S. gold reserve was run down in the 2 years prior to that from 25,000 tons to the current 8,133 tons. And there were special Air Force transport planes being impressed into the shipping of U.S. gold over to the Bank of England to keep up with the offtake. At a certain point, the offtake became overwhelming. The London Gold Pool was shut down. The gold price started going up. That's how it ends, or it ends with central bank revaluation of gold at a much higher price, with Western central banks tendering for gold at a much higher price, and they get back all that they've bled out into the market over the last 30 years.
And it's just one simple thing. Look what just happened a while ago with U.S. Mint sales of coins. They stopped selling it. You don't sell it because there's plenty around. Canadian put American silver, their Canadian silver coins on ration. Well, that doesn't say it's plentiful. That's two governments.
No, they did
saying-
not want to go into the market to buy the silver necessary to mint the coins to fulfill public demand, even though in the United States it's the law that the mint is supposed to issue as many gold and silver coins as necessary to meet demand. But they don't want to go into the market to get the metal because that will raise the price, so they just cease production.
Gentlemen, thank you so much for this conversation. If anyone would like to learn more about GATA, go to gata.org. Thank you so much.
Thank you, Dan.